Welcome to Investors Insights. Today's topic is not just a bill. We chose that because there's a lot of talk about the big, beautiful bill that passed and was signed into law by President Trump over the long weekend. And we've done a lot of talking about this leading up to it, about all the hard work that it went into. But now that it's passed, the hard work really starts. Now we've got to see what's in it. But before we dig into that and where this goes with the markets, Ty, why don't you continue our conversation on the debt increase part of that bill, something that really wasn't covered by most media outlets, but it's something we've been talking about for a long time. Is actually possibly more impactful for the markets.
Yeah, of course, there's a lot of things in this bill, and we're starting to unpack that. But one thing is clear is that the debt ceiling is going to be raised. We have talked about this throughout the year. Keep in mind, we have not issued any new debt as a country so far this year. So we're, more than halfway through the year in July. We have not issued any new debt as a country. We have been draining our Treasury General account, which is kind of like our savings account for the government or for the country. And so essentially what happens is we will drain that to a certain level. It'll replenish whenever they get tax returns, and then they were starting to drain it again. We have hinted that we were probably going to drain that or get to a very uncomfortable, number around August. So it is nice that this has passed. But what does that mean? It could mean that liquidity dries up a little bit. So instead of putting a lot of money into the system, they're going to be issuing new Treasury bonds where people are going to be buying those, and the money from them purchasing those T-bills are going to go to the government to replenish the Treasury General account. So essentially, liquidity is going to diminish. And typically, when that happens, it becomes a little more rocky for stock prices. So it's something we're certainly going to keep an eye on. The way they're going to do this, however, is pretty interesting right now with rates elevated like they are. It seems like they're going to issue a lot of T-bills, which will mature in weeks or a year or less. And I think the goal is to mainly, you've seen President Trump really put pressure on Jay Powell and the Fed to bring down rates. I think the goal is to continue to issue short-term debt until those rates start coming down to a more manageable level, because you don't want to refinance our country's debt at these elevated interest rates. So that's something to keep an eye on as well. Right now they're going to do T-bills. When does that kind of shift? Are they looking for a 3% interest rate, a 4%? What's that number they're looking for?
Yeah, absolutely. It's kind of the devil will be in the details in terms of also how they're going to start issuing debt. And we've got a big Fed meeting later this month, so that'll all come together. So the definitely the fun starts now. So we're watching that closely. Thank you, Ty, for digging into that for us. And now back to the big beautiful bill, which I guess the eye of beauty is in the eye of the beholder, very much so in this. And I think there's definitely winners and losers. And our research partners at Strategas Research, they created a list of winners. These are 70 companies in the S&P 500 that have the most to benefit from the provisions in this bill. And you can see on this chart that those companies over the last so far this year, they really rallied on early talks. But since kind of mid-March, early April, they've fallen down, and they really haven't priced in the passage of this bill. And this kind of happens a lot with when it comes to DC and corporate America. Corporate America really doesn't believe them until you see the whites of the eyes, until the bill actually passes. So there's a potential some good upside in parts of the market. But if this part's going up, there is risk to other sides. So this is something we're watching closely, see if we can see who's going to benefit from this and how we can use that to benefit our clients. But additionally, while the focus has been on this bill, the focus has been off tariffs. Now that this is passed, the biggest risk to the market right now in our sense is that the President Trump's administration believe that this bill can reduce or sterilize the negative impact of tariffs. So now that the corporate taxes have been cut, they can refocus on more aggressive tariff impacts. And that starts on July 9th, which is this week. That 90-day pause from April ends this week. And so there's going to be a lot of heated up discussions around where tariffs are. And research shows that tariffs are likely not to go down from here. They're not going to go spike up to the 600 some odd billion dollar annual tariffs that we had earlier this year. But right now we're closer to 200. So a lot of research expects to be somewhere between that 200 and maybe that $300 billion annual revenue. Now that we have the tax bill, they can hopefully sterilize some of the negative impacts. So we're going to watch that closely. There's going to be a lot of news come out this week about what's in this bill. It's over 1,000 pages, depending on how big you print. It printed on, it could be upwards of 2,000, or I've seen as small as 900. I think that's just depending on your printer. But either way, it's a big bill that people are going to have to dig into and figure out who wins, who loses, and we're going to get that started with you this week. But if you have any questions, please don't hesitate to reach out to us. We'd love to talk to you about it in further detail. Otherwise, I hope you have a great rest of your week. Thank you.